Welcome back to Dejan's Journal, the only crypto rundown where ZK proofs, Ponzi schemes, and tokenized Michael Saylor can all coexist in one episode. If you blinked this weekend, you missed everything. But don't worry, we've got you covered. Here's what happened in crypto this week. Headlines: Vitalik proposes pluralistic identities to fix digital ID risks. Gemini tokenizes Michael Saylor's MSTR stock for EU users. Trump dodges crypto conflict of interest question. Ponzi king Dwayne Golden sentenced to 8 years. Bitvavo becomes the latest exchange to secure MiCA approval. Let's dive in. Story 1. Vitalik Buterin pushes for pluralistic identity systems. Ethereum co-founder Vitalik Buterin has once again stepped into the philosophical and technical frontlines, this time addressing one of the thorniest challenges of the digital age: identity. In a new blog post, Buterin critiques the growing push for singular, blockchain-based digital ID systems, even when wrapped in zero-knowledge proofs, ZKPs. While these systems are often celebrated for enabling privacy-preserving verification, proving you're human or unique without revealing who you are, Buterin argues that the architecture still carries a hidden and dangerous flaw: rigid singularity. ZK wrapping solves a lot of important problems, he writes, but ZK-wrapped ID still has risks. The core problem: if every human is tethered to a single, global, cryptographic identity, regardless of how private the data is, we're creating a system ripe for de-anonymization, coercion, exclusion, and surveillance. Even the best privacy tech can't save you if your digital ID becomes a prerequisite to access work, vote, or post online. This danger grows under authoritarian regimes, or even algorithmic moderation systems that could deplatform or discriminate against users based on a singular, traceable identity. The pluralistic solution. Buterin proposes a pluralistic identity system. Users can have multiple digital identities for different contexts, for example, work, voting, gaming, activism. These IDs may still be verifiable through ZKPs, but without linking them into a single trail. This allows for flexibility, pseudonymity, and contextual privacy while maintaining integrity and fairness. He also notes that identity should be non-coercive. Individuals should be able to choose the identity system they want, not be forced into one global ID by governments or megacore. Context and urgency. The timing is critical. Projects like WorldCoin, now over 10 million users, Taiwan's ZK ID initiative, and the European Union's digital ID framework are accelerating rapidly. All are exploring or deploying blockchain-native IDs, and many are leaning toward one person, one ID models. Vitalik's warning is clear. Privacy isn't just about encryption, it's about design. And if the global ID rails are built wrong today, they could be weaponized tomorrow. Story 2. Gemini launches tokenized MSTR stock for EU investors. Traditional finance just took a major step toward on-chain reality, and Michael Saylor is at the center of it. Crypto exchange Gemini has launched a tokenized version of MicroStrategy, MSTR, stock, the public company best known for its unapologetically massive Bitcoin holdings. The tokenized asset is only available to users in the European Union for now, but it represents a clear move toward blending traditional equities with blockchain infrastructure. Gemini's message was blunt: traditional financial rails are hard to access and in need of modernization. Why this matters? The tokenization of real-world assets, RWAs, has long been a talking point in crypto, but this marks one of the first major public equities to be offered as a fully tradable, on-chain token on a centralized platform. With the tokenized MSTR, EU users can now trade exposure to MicroStrategy's stock 24/7, settle transactions on-chain, integrate real equities into DeFi strategies, eventually. And this is just the beginning. Gemini confirmed that more tokenized stocks and ETFs are coming in the next few days. If that rollout includes blue-chip names like Tesla, Google, or BlackRock, this could become a game-changer. Broader context: RWAs are quickly becoming one of the hottest verticals in crypto, See BlackRock's Biddle Fund, MakerDAO's treasury strategies. Tokenized treasuries and equities offer a bridge between TradFi and DeFi, enabling exposure to real-world yield and assets without needing access to legacy brokers or banks. For users in emerging markets or underbanked regions, this shift could mean direct access to US equities for the first time. But challenges remain. Regulatory friction, liquidity fragmentation, and custody limitations could slow the adoption curve. Still, Gemini's move signals that the tokenized asset race has officially begun, and the legacy markets are watching. Story 3. Trump avoids question on crypto conflicts amid legislative push. Crypto has officially become a presidential talking point, and now it's becoming a political liability. During a White House press briefing, President Donald Trump was confronted with a direct question. Would he consider divesting from his and his family's crypto ventures to avoid potential conflicts of interest tied to upcoming crypto legislation? His response wasn't exactly reassuring. "I became a fan of crypto. We've created a very powerful industry, and that is more important than anything we invest in." No mention of divestment, no plan to address transparency, just a broad endorsement of the industry he now stands to regulate. Why this matters? Trump has emerged as one of the most overtly pro-crypto presidents in US history, publicly embracing Bitcoin miners, praising digital assets, and even offering NFTs. But now, that alignment is colliding with the need for policy clarity. Several Democratic lawmakers have raised red flags, warning that no crypto legislation will pass unless Trump's financial interests are disclosed or removed. That includes the highly anticipated FIT21 bill, stablecoin regulations, and frameworks for crypto market structure. And the stakes couldn't be higher. If Trump pushes through crypto-friendly regulations without divestment, critics could frame it as self-dealing. If the bills stall, the entire US digital asset market remains in a fog of uncertainty. The bigger picture. This moment echoes the broader debate about whether public officials should be allowed to hold assets in industries they regulate, whether that's stocks, real estate, or crypto. The difference now is that crypto is no longer fringe. It's a $2 T+ market with real political weight, real institutional players, and real voters behind it. If the conflict narrative gains traction, we could see delays in crypto legislation, calls for congressional asset disclosure reform, crypto becoming a wedge issue in the 2024 election. Trump may have opened Pandora's wallet. Now the question is, can the legislation survive the fallout? Story 4. Ponzi scammer gets 8 years for $40 million crypto fraud. A major chapter in crypto's dark side just came to a close, and justice, this time, was served. Dwayne Golden, age 57, has been sentenced to 97 months in federal prison for masterminding one of the largest crypto Ponzi schemes in recent years. Golden ran a trio of fake crypto investment platforms, EmpowerCoin, eCoin Plus, and JetCoin, which lured in thousands of investors with promises of guaranteed high returns from advanced crypto trading strategies. What really happened? There were no trading strategies. There were no profits, just a classic Ponzi setup. New investor money was used to pay earlier participants. The rest was siphoned off by Golden and his partners for personal gain. When the cash flow dried up, the platforms disappeared, leaving investors with massive losses. The US Department of Justice labeled it textbook fraud, and it marked a rare instance of full federal prosecution for a crypto-specific crime involving wire fraud and money laundering. The fallout? Over $40 million was stolen. Hundreds, possibly thousands, of victims lost life savings. And once again, crypto's reputation took a hit, especially among regulators and skeptical institutions. This case echoes others we've seen, from BitConnect to OneCoin projects dressed up in flashy white papers, technical jargon, and staged social proof that prey on new retail investors. The takeaway: don't be blinded by buzzwords like blockchain-backed, automated trading, or decentralized profit sharing. If it promises guaranteed returns with no risk, it's almost certainly a scam. And even in crypto, justice catches up eventually. Golden's sentencing sends a clear message: The age of unregulated Wild West-style fraud in digital assets is coming to an end. Regulators are watching, and more arrests are likely on the horizon. Story 5. Bitvavo secures MiCA license from Dutch regulators. The EU's long-anticipated crypto regulation era is finally here, and Bitvavo just made it through the gate. Dutch-based crypto exchange Bitvavo has officially become one of the first firms to receive a MiCA license from the Netherlands Authority for Financial Markets, AFM, clearing it to operate across all European Union member states under the Markets in Crypto Assets (MiCA) framework. This isn't just a regulatory green light, it's a passport to the 27th of March kets. What is MiCA, and why does it matter? MiCA, short for Markets in Crypto Assets, is the European Union's flagship regulatory framework for digital assets, designed to standardize crypto rules across EU nations, offer legal clarity for token issuers, stablecoin operators, and crypto exchanges, protect users with consumer disclosures, reserve requirements, and licensing mandates. MiCA represents the first large-scale, binding regulatory regime for crypto anywhere in the world. While the US is still mired in political gridlock over crypto laws, Europe is moving, and MiCA is the blueprint. Bitvavo's license is more than a legal victory, it's a strategic moat. What Bitvavo Said? According to CEO Mark Nuvelstein, the process was efficient and marked a step toward a truly harmonized crypto market in Europe. For a level playing field in Europe, it is essential that the rules are formulated and enforced consistently across all member states. Translation: the real battle isn't just getting licensed, it's surviving in a post-MiCA environment where only the compliant and well-capitalized players will endure. The coming shakeout, with MiCA coming fully into force in 2026, this is just the beginning of a massive regulatory shakeout. Exchanges and token projects that fail to meet transparency and reserve standards operate from grey jurisdictions, can't show verifiable financials, are likely to be blocked from the EU altogether. This also spells trouble for shadow DeFi protocols operating without any centralized legal entity. And it could push more innovation toward on-chain compliance tools, regulatory oracles, and ZK-compliant identity systems, especially for token issuance. What's next? Expect more exchanges, Binance, Kraken, Coinbase, to race for MiCA licenses in key EU nations. Token projects may be forced to rework tokenomics to meet the new classifications under MiCA. Europe could become the most legally clear and institutionally friendly market for crypto over the next 24 months. Bitvavo isn't just early, it's now positioned as a foundational player in the next phase of European crypto finance. The question isn't whether MiCA will change the game. It's who will still be on the field when the whistle blows. Your turn, Degens. Which story matters most this week? Is Vitalik right about identity risks? Should Trump be forced to divest his crypto holdings? Will tokenized stocks take off in DeFi? Let us know below. Leave your thoughts, and don't forget to like, share, and follow for more degenerate dispatches.